Hello, welcome once again. Good day, ladies and gentlemen. We've done our part 1 and part 2 for our Forex beginners class, and today we're moving into part 3, which is called When Can You Trade Forex? So, without much ado, my name is Halil Ahmed Samuel. Now, let's go to our topic for the day. When can you trade Forex? So, we have Forex trading sessions. Now that you know what Forex is, why you should trade it, and who makes up the Forex markets, it's about time you learn when you can trade. It's time to learn about the different Forex trading sessions. You can see different times showing here. Yes, it is true that Forex markets open 24 hours a day, but that doesn't mean it's always active the entire day. You can make money trading with the market moves. You can trade money when the market moves up, and you can even make money when the market moves down. But you will have a very difficult time trying to make money when the market doesn't move at all. And believe us, there will be times where the market is as still as the victims of Medusa. This lesson will help determine when the best times of the day are to trade. Forex market hours. Before looking at the best times to trade, you must look at what a 24-hour day in the Forex world looks like. The Forex market can be broken up into 4 major trading sessions. The Sydney sessions, which signifies the commence of the trading day, the Tokyo section, which is next, the London section, which is the third major section, and the Trump favorite time to tweet before he was banned, the New York session. Historically, the Forex market has 3 peak trading sessions. Traders often focus on one of the 3 trading periods rather than attempt to trade the markets 24 hours per day. This is known as the Forex 3-session system. These sessions consist of the Asian, European, and North American sessions, which are also called Tokyo, London, and New York sessions. Some traders prefer to differentiate sessions by names of the continent. Other traders prefer to use the names of the cities. We prefer using city names, but continents are cool also. The international dateline is where, by tradition, the new calendar day starts. So here is a schematic of our international dateline, and you can see Sydney and Auckland, New Zealand are also part of it in the new international deadline. So from this new international deadline, the day starts to the left, that is moving to the west, as you can know. The same way as the sun rises in the east and sets in the west. That's how the earth rotates from east to west. That's how it will use the same method also in calculating our international deadline. Since New Zealand is a major financial center, the Forex market opened there on Monday morning, while it's still Sunday in most of the world. Even though trading starts in New Zealand, it's still called the Sydney session. Makes no sense, but we don't make the rules. Until Friday, there is no time during the week when the market formally closes, although there is a brief lull in activity between the 1900 and 2000 hour GMT, when most American traders have gone home and most Kiwi and Aussie traders are getting ready for work. Other than the weekends, there are just 2 public holidays when the entire Forex market is closed: Christmas Day and New Year's Day. The following are tables of the open and close times for each session. So during the spring and summer, which is in the United States, that is from March, April to October, November. The local time in each jurisdiction is like this in the morning. Again, from March, April to October, November, these are the local times in each major Forex market, the 4 major Forex markets. So, local time, which is for the host country, we have the Sydney open time, which is 7 a.m. and they coincide with the Eastern Daylight Time, which is 5 p.m. I won't tell you which country is Eastern Daylight Time or which region. You should be able to start getting used to this by now. And which is also 10 p.m. British Standard Time. That's GMT plus 1. You can see also GMT minus 2 for the EDT. And you can see GMT plus 1 for the BST. So also Sydney closes around 4 p.m. in their local time, but it's 2 a.m. EDT and 7 a.m. BST. The next major time or the next major session is the Tokyo session, which opens Tokyo time 9 a.m., which is 8 p.m. EDT and 1 a.m. BST. And then Tokyo closes by 6 p.m. with their own local time, which is 5 a.m. EDT and 10 a.m. BST. Next is the London session, which opens by 8 a.m. local time, which is 3 a.m. EDT and 8 a.m. BST. And also London closes by 4 p.m. local time, which is 11 a.m. EDT and 4 p.m. BST. And finally, we have the New York open session, which opens by 8 a.m., which is 8 a.m. EDT and 1 p.m. BST. And now the New York time closes by 5 p.m. The New York session closes by 5 p.m. local time, and that is 5 p.m. EDT. That's GMT minus 4 and 10 p.m. BST, which is GMT plus 1. Now the next time format, or the next daily whatever. I don't want to use the terms for you so that I will not get you guys into your geography. I just want to say, okay, let me just call it the fall winter in the United States, which is from October, November to April, March. And again, the 4 major sessions are here and their local time for each host country. Starting with the Sydney, it is 7 a.m. in Sydney. Then it will be 3 p.m. EST. I won't tell you what EST stands for. I believe you should be able to find it by now. I want to increase your curiosity. So 3 p.m. EST, which is GMT minus 5. And then GMT, it is now 8 p.m. GMT. Now Sydney closes by 4 p.m. In EST, it is 12 a.m. and in GMT, 5 a.m. The next session, which is the Tokyo session, opens by 9 a.m. local time, and that is 7 p.m. EST and 12 a.m. GMT. Tokyo closes by 6 p.m. EST, 6 p.m. local time, which is 4 a.m. EST and 9 a.m. GMT. The next one, the London session, opens by 8 a.m. local time, which is 3 a.m. EST and 8 a.m. GMT. London closes by 4 p.m. local time, which is 11 a.m. EST and 4 p.m. GMT. And the final major session, which is the New York trading session, opens by 8 a.m. local time, which is 8 a.m. EST and 1 p.m. GMT. Then the New York session closes by 5 p.m. local time, which is 5 p.m. EST and 10 p.m. GMT. So these are the major sessions and the different time of the years. Actual open and close times are based on local business hours, with most business hours starting somewhere between 7 to 9 a.m. local time. So the daylight saving time, the DST, the open and close times will also vary during the months of October and November and March/April, as some countries like the United States, England and Australia shift to and from daylight savings DST. The day of the month that the country shifts to and from DST also varies, confusing us even more. And Japan doesn't observe daylight savings So thank you, Japan, for keeping it simple. Now, you are probably looking at the Sydney Open and wondering why it shifts 2 hours in the Eastern time zone. You would think that the Sydney Open will move 1 hour when the US adjusts for standard time, but remember that when the US shifts 1 hour back, Sydney actually moves forward by 1 hour. Sessions are also opposite in Australia. Keep this in mind if you ever plan to trade during that time period. Dealing with daylight saving time is a pain, but that's what happens when the market trades around the clock. It's important to remember that the forex market's opening hours will change in March, April, October, and November as countries move to daylight savings on different days. Trading sessions overlap. Also, take notice that in between each forex trading sessions, there is a period of time where two sessions are open at the same time. For example, during the summer, from 7 to 9 a.m. GMT, the Tokyo session and London sessions overlap. And during both summer and winter, from 12 p.m. to 3 p.m. GMT, the London sessions and the New York sessions overlap. Naturally, these are the busiest times during the trading day because there is more volume when two markets are open at the same time. This makes sense. This makes sense because during these times, all the market participants are willing and dealing, which means that more money is transferring hands. Now, let's take a look at the average pip movement of the major currency pairs during each forex trading sessions. So these are the major currency pairs, including the currency crosses. So we have the euro versus the United States dollar, Great British pound, US dollar, US dollar, Japanese yen, Australian dollar, US dollar, New Zealand dollar, US dollar, US dollar, Canadian dollar, US dollar, Swiss franc, the eight majors. In addition of the euro, Japanese yen, Great British pound, Japanese yen, Australia, Japanese yen, euro, Great British pound, euro, Swiss franc, and you can see the different trading sessions and which one has the highest volume. So during the London sessions, you can see almost basically all during the London sessions are highly traded. There's no more volumes there. From the table, you can see that the London session normally provides the most movement. Notice how some currency pairs have much larger pip movements than others. This is a chart to show you their pip movements. And you can see the blue bar, for Tokyo, the red bar is for London, and the yellow orange bar is for the New York sessions and the different currency pairs, and you can see for yourself here. That's how we got the table. From the table we got this bar chart rather. Let's take a more in-depth look at each of the sessions as well as those periods when the sessions overlap. When can you trade forex? Tokyo section or session. For traders living in Murica, that's America, the trading day actually begins on Sunday night at 5 p.m. EST, which is 10 p.m. GMT. However, liquidity doesn't really show up until Tokyo opens a few hours later. The opening of the Tokyo session at 12 a.m. GMT marks the start of currency trading in Asia. You should take note that the Tokyo session is sometimes referred to as the Asian session. One thing worth noting is that Japan is the third largest forex trading center in the world. This shouldn't be too surprising, since the yen is the third most traded currency, partaking in 16.8% of all forex transactions. Overall, around 20% of all forex trading volume takes place during the Asian session. It's not all coming from just Tokyo though. There are other major financial centers in Asia, such as Singapore and Hong Kong. What's interesting is that nowadays, more forex trading volume comes out of Singapore and Hong Kong than in Tokyo. Both Singapore and Hong Kong comprises 7.6% of the overall volume each, while Japan had 4.5%. Maybe Asian session is more appropriate than the Tokyo session. Next is the table of the Asian session pip range of the major currency pairs. So you can see the different pip range of the major currency pairs just on the Tokyo session. And the highest here is the Great British Pound Japanese Yen during the Tokyo session, or the Asian sessions like it's supposed to be called. These pip values were calculated using averages of past data. Take note that these are not absolute values and can vary depending on liquidity and other market conditions. Also, the session range from Euro Swiss franc has not been included since the Swiss franc has been pegged to the euro at 1.200 during that period. Here are some key characteristics that you should know about the Tokyo session. Action isn't only limited to Japanese shores. Ton of forex transactions are made in other financial hotspots like Hong Kong, Singapore, and Sydney. 2. The main market participants during the Tokyo sessions are commercial companies. Those are the exporters and central banks. Remember, Japan economy is heavily export dependent, and with China also being a major trade player, there are a lot of transactions taking place on a daily basis. Liquidity can sometimes be very thin. There will be times when trading during this period will be like fishing. You might have to wait long time before getting a nibble. 4. It is more likely that you will see stronger moves in Asia Pacific currency pairs like Australian dollar, US dollar, and New Zealand dollar, US dollar, as opposed to non-Asian specific terms like non-Asian Pacific pairs like Great British Pound, US dollar. 5. During those times of thin liquidity, most pairs may stick within a range. This provides opportunities for short-term day traders or potential breakout traders later in the day. Most of the action takes place early in the session when more economic data is released. Moves in the Tokyo session could set the tone for the rest of the day. Traders in the later sessions will look at what happened during the Tokyo sessions to help organize and evaluate what strategies to take in other sessions. 8. Typically, after big moves in the preceding New York session, you may see consolidation during the Tokyo session. Which pairs should you trade? Since the Tokyo session is when news from Australia, New Zealand, and Japan comes out, this presents a good opportunity to trade news events. Also, there could be more movement in the yen pairs as a lot of yen is changing hands as Japan companies are conducting business. Take note that China is also an economic superpower, so whenever news comes out from China, it tends to create volatile moves. With Australia and Japan relying heavily on Chinese demand, you could see greater movement in Australian dollar and Japanese yen pairs when Chinese data comes in. Now, let's check out how you can trade the London session. When can you trade Forex? London session. Just when Asian market participants are starting to close shop, their European counterparts are just beginning their day. While there are several financial centers all around Europe, it is London that market participants keep their eyes on. Historically, London has always been a center of trade thanks to its strategic location. Today, London benefits from its time zone, which is London mornings 7 a.m. GMT overlaps with late trade in Asia, and London afternoons 12 p.m. GMT overlaps with New York City. It's no wonder that it is considered the forex capital of the world, with thousands of folks making transactions every single minute. About 43% of all forex transactions happen in London. Some traders also refer to the London session as the European trading session. That's because aside from London, there are major financial centers open in Europe as well, such as Geneva, Frankfurt, Zurich, Luxembourg, Paris, Hamburg, Edinburgh, and Amsterdam. Next is a table of the London session pip ranges for the major currency pairs. As you can see, the highest volume here is the Great British Pound, Japanese Yen, which is then followed closely by the Australian Dollar, Japanese Yen, and then you can add the Euro US Dollar. Again, these pip values are calculated using averages of past data. Take note that these are not absolute values and can vary depending on liquidity and other market conditions. Also, the session range for the Euro Swiss franc has not been included since the Swiss franc has been pegged to the euro at 1.2000 during the period. Here are some neat facts about the European session. 1. Because the London session crosses with the two other major trading sessions, and with London being such a key financial center, a large chunk of forex transactions take place during this time. This leads to high liquidity and potential lower transaction costs, that is, lower pip spreads. 2. Due to the large number of transactions that take place, the London trading session is normally the most volatile session. Most trends begin during the London session and they typically will continue until the beginning of the New Year session. Volatility tends to die down in the middle of the session, as traders often go off to eat lunch before waiting for the New York trading sessions to begin. Trends can sometimes reverse at the end of the London session, as European traders may decide to lock in profits. So, which pairs should you trade? Because of the volume of transactions that takes place, there is so much liquidity during the European session that almost any pair can be traded. Of course, it may be best to stick with the majors, which are the Euro US Dollar, Great British Pound US Dollar, US Dollar Japanese Yen, and US Dollar Swiss franc, as these normally have the tightest spread. Also, it is these pairs that are normally directly influenced by any news reports that come out during the European session. You can also try the yen crosses, more specifically Euro Japanese Yen and Great British Pound Japanese Yen, as these tend to be pretty volatile at this time. Because these are cross pair, the spreads might be a little wider though. So next up, we have the New York session, a jungle where dreams are made of. Hey, isn't that an Alicia Keys song? When can you trade Forex? New York session. Right as European traders are getting back from their lunch breaks, the US session begins at 8 p.m. or Eastern Standard Time. 8 a.m. Eastern Standard Time, which is 12 p.m. GMT, as traders start rolling into the office. Just like Asia and Europe, the US session has one major financial center that the markets keep their eyes on. We are talking, of course, about the city that never sleeps. New York City, baby, the concrete jungle where dreams are made of. About 17% of all forex transactions happen in New York. Some traders also refer to the New York session as the North America trading session. That's because aside from New York, there are major financial centers open in North America as well, such as Toronto and Chicago. Next is the table of the New York session pip ranges of the major currency pairs. So here they are, and you can see there are two major, the Euro US Dollar and the Great British Pound Japanese Yen are the two most traded during this period. Again, these pip values are calculated using averages of past data. Take note that these are not absolute values and may vary depending on liquidity and other market conditions. So here are some tips you should know about trading during the New York session. 1. There is high liquidity during the morning as it overlaps with the European session. 2. Most economic reports are released near the start of the New York session. Remember, about 85% of all trades involve the dollar. So, whenever big time US economic data is released, it has the potential to move the markets. 3. Once European market close shop, liquidity and volatility tend to die down during the afternoon US session. There is very little movement Friday afternoon, as Asian traders are now singing in the karaoke bars while European traders head off to the pub to watch the soccer match. Also on Fridays, there is a chance of reversal in the second half of the session as US traders close their positions ahead of the weekend in order to limit exposure to any weekend news. So which pairs should you trade? Take note that there will be a ton of liquidity as both the US and the European markets will be open at the same time. You can bet that banks and multinational companies are burning up the telephone wires. This allows you to trade virtually any pair, although it will be best if you stick to the major and minor pairs and avoid those weird ones. Also, because the US dollar is one of the other sides of the majority of transactions, everybody will be paying attention to the US data that is released. Should these reports come in better or worse than expected, it could dramatically shake up the market as the dollar will be jumping up and down. Confused about which session to start when? You meet the next session just for you. Best times of the day to trade Forex. Quick pop quiz. What time of day are the TV ratings highest? If you are said during prime time, then you'll be correct. So what does this have to do with trading session? Well, just like TV ratings, aka liquidity. Just like TV ratings are, aka liquidity, at their highest when there are more people participating in the market. Logically, you may think that this happens during the overlapping within the two sessions. If you thought that way, you'd only be half right. Let's discuss some of the characteristics of the two overlapping sessions to see why. Liquidity, that's for the Tokyo-London overlap. Liquidity during this session is pretty thin for a few reasons. Typically, there isn't as much movement during the Asian sessions, so once the afternoon hits, you're pretty much a snooze resist. With European traders just starting to get into the office, trading can be boring as liquidity dries up. This will be an ideal time to take a chill pill, play some put golf, or look for potential trades to take for the London and New York session. London-New York overlap. According to the latest data from FX Liquidity Analytics Service for the Forex market, liquidity is at optimal level around 10 a.m. and 3 p.m. London time. That is about 10 a.m. New York time, and that is 9 a.m. and 2 p.m. GMT. This is when the real shebang begins. You can literally hear traders crack their knuckles during this time because they know they have their work cut out for them. This is the busiest time of the day as traders from the two largest financial centers, London and New York, begin bucking it out. It is during this period we can see some big moves, especially when news reports from the US and Canada are released. The market can also be hit by late news coming out of Europe. If any trends were established during the European session, you could see the trend continue as US traders decide to jump in and establish their position after writing up what happened earlier in the day. Lastly, it's important to know that it's during this period where the WM Rejuvenity Spot benchmark rate is determined. The rate is set at 4 p.m. London time, which is 3 p.m. GMT, and also known as the London fix. A currency fixing is a set time each day when the prices of currency for commercial transactions are set or fixed. Since currency prices fluctuate from second to second, a daily reference point is needed. Banks and other financial institutions use this daily rate to set their currency exchange rates, which in turn determine the prices used in corporate foreign exchange transactions. From a traded standpoint, this daily fix may see a flurry of trading in the market prior that's generally 15 to 30 minutes to the fixing time that abruptly disappears exactly at the fixing time. Lastly, some European traders may be closing their position as their day ends, which could lead to some choppy moves right before lunchtime in the United States. So, best days of the week to trade Forex. So now we know that the London session is the busiest out of all the other sessions, but there are also certain days in the week where all the markets tend to show more movement. Know the best days of the week to trade Forex. So below is a chart of average pip range for the major pairs for each day of the week. So these are the major pairs from the Euro USD down to the Euro Swiss franc pairs. We have Sunday to Fridays. As you can see, on Sunday the major pair that moves is a Great British Pound, Japanese Yen. On Monday, you can see also the Great British Pound, Japanese Yen is high, and other pairs too, Great British Pound, US Dollar, and the rest of them. Tuesday also, you can see more average pip movement. Wednesday too, a higher average pip movement, and also on Thursday. So these are just the average pip movement per day for the major currency pairs. As you can see from the chart above, it's best to trade during the middle of the week, since this is when the most action happens. Fridays are usually busy until 4 p.m. GMT, and then the market pretty much drops dead until it closes at 9 p.m. GMT. This means we only work half days on Fridays. The weekend always starts early, yippee. So based on all this, we've learned when the busiest and best days of the week to trade Forex are. The busiest times are usually the best times to trade, since high volatility tends to present more opportunities. Managing your time wisely. Unless you're Edward Cullen, who does not sleep, there is no way you can trade all sessions. Even if you could, why would you? While the forex market is open 24 hours daily, it doesn't mean that action happens all the time. Besides, sleep is an integral part of a healthy lifestyle. You need sleep to recharge and have energy so that you can do even the most mundane tasks like morning the roads, talking to your spouse, taking the dog for a walk, or organize your stamp collection. You will definitely need your rest if you plan to become a hot shot for a currency trader. Every trader should learn when to trade. Actually, scratch that. Every trader should know when to trade and when not to trade. Knowing the optimal times you should trade and the times when you should sit out and just play some Fortnite instead. Unless you play Fortnite a little too much already. So here's a quick cheat sheet of the best and worst times to trade. Best times to trade. 1. When two sessions are overlapping, of course. These are also the times when major news events come out to potentially spark some volatility and directional movements. Make sure you bookmark the market hours cheat sheet to take note of the opening and closing times. The European session tends to be the busiest out of the three. The middle of the week typically shows the most movement as the pip range widens for most of the major currency pairs. So worst times to trade. 1. Sundays. Everyone is sleeping or enjoying their weekend. 2. Fridays. Liquidity dies down during the latter part of the US session. 3. Holidays. Everyone is taking a break. 4. Major news events. You don't want to get whipsawed. 5. When you just broke up with your significant other because you chose trading Forex over him or her. Wait until the next London session instead. Can't seem to trade during the optimal sessions, don't fret. You can always be a swing or position trader. We'll get back to that later. Meanwhile, let's move on how you actually make money trading currency. Excited? You should be. That has been the end. So the next video will continue from where we stop. Hope you've learned one or two about your different times of trading the Forex. As always, you can contact me on any of the following platforms: Facebook, YouTube, my Gmail, Telegram, Twitter, and of course, WhatsApp. Let me know if you have any questions, any inquiry, or any observation. Thank you, and see you in the next class.